Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching IndianOpen. Let's go straight to the headlines. China may play hardball for fresh talks after Trump is set to favor imposing tariffs before discussions begin. IL&FS fundraising plans to likely take at least a month as the board awaits shareholder approval to raise the ceiling on debt and equity capital. The government's 5-point plan to shore up the rupee may have already been priced in, say experts. And Ircon International opens for subscription today with a price band of rupees 470 to 475 rupees per share. Well, it doesn't look like we'll start off on a good note, though I must say the global markets on Friday overnight did not really indicate anything to this effect, but maybe, just maybe, knows a resolution to the trade talks or otherwise leading to the Asian markets starting off on a very weak note. So this is what the US markets did in Friday's session. The European markets too were fairly placid, but Asia is having a deep gash of red, and the SGX Nifty currently seems to be showing a downtick of at least 0.5%. So we'll definitely starting off in the red. The question mark is, can we worsen? Because if you look at the Asian bourses, Hang Seng, Shanghai, etc., all of them have a deep tinge of red in the session today. So may not be the best of starts. And does that disturb the trend a little bit? Because in Friday's session, we seem to be bouncing off some key moving averages for all the key indices, whether it was the 50 or the 100-day moving averages. We seem to take support there for the Sensex, the Nifty 500. All of them were bouncing off some key moving averages. So does this kind of spoil that what could have been a trend in a meaningful way? The mid-cap and the small-cap indices opening levels in Friday's session marked the lowest point of the day. And when we spoke to technical experts about this pattern, they said that that augurs very well for these key indices. But in a scenario when we start off lower today, does that also get disturbed? That's the key question. So the world markets may pay small sport to what was seemingly looking like a bit of a bounce. The rupee sensitives like OMCs bounced back very well in Friday's session, and depending on what the currency does in today's session, those could also come into play. So the market may weigh heavy, and the fact that the rupee, after strengthening for a couple of days, doesn't look like it might continue doing that is also another factor that might play. Last but not the least, do watch out for the sugar stocks. Big jump in volumes in Friday's session. We were talking about this all through Friday, that if you sorted the small cap space for the top 10 gainers, 10 out of 10 were sugar names. And just forget the delivery volumes. Those would be small on such a high traded day. But look at the volume change numbers in almost all of these names, be it an Uttar Pradesh based mill or be it a South based mills. Almost all of them had phenomenal volume upticks in Friday's session. Let's see if that continues in trade. Flows were positive in Friday's session. FIs pumped in about 1,000 crores, DIs about 115 crores. So flows seem to be okay. Let's wait and watch if that translates into some bit of activity in today's session. However, specific stocks to watch out for in trade today. Some results and some names which have on which brokerages have come out with notes. So REC, the numbers seem good. NII may have been down 10%, but the bottom line numbers seem reasonably okay. Compare this to what PFC did. It seems like a shining star, really, REC. So let's see if this one has a positive reaction in the session today, on a day when the market is not starting off all that positively. A couple of other positive newsmakers include a brokerage note as well. So CLS has come out with a note on PVR. Let's see if that reacts positively. There is a target price upgrade as well onto PVR from CLSA, so that could be an interesting one to monitor in trade today. They've raised the target price to 1690. They see a potential upside of 22%. Let's see. There's also a downgrade or an upgrade that's come on Divi's lap from Phillip Capital, but PVR is the one to monitor today. And last but not the least, I thought IRB Invit was interesting. Let's wait and watch if that has some moves because of the promoter putting in some money. Virender Maiskar acquired about 75 lakh shares at 75 rupees in IRB Invit. Let's see if that has some reactions in the session today. Okay, so 2 or 3 things that we will talk about on First Word. First, IL&FS will have to go through its shareholders before it can raise more funds, which means there may be more defaults just around the corner. Sajid joins in to take us through all of those details. Currency expert Anand Narayan then joins in to explain why some of the measures announced by the government may have already been factored in by the money markets. So that's an important conversation. And lastly, Morgan Stanley does not think IT stocks stand to gain a lot from the rupee's weakness and from the current valuations. Darshan joins in to tell us why. The first piece on First Word. further fundraising by IL&FS will at least take a month. The board needs to take the shareholders' approval to raise the ceiling placed on debt and equity capital, and sources tell Bloomberg Quint that they plan to take it up at the forthcoming AGM on the 29th of September. Sajid Pangat now Johnson with the details. And what's the way ahead looking like? Now, Sajid, the only question will be, then the last two board meets, the one that was there in the first week of September and then which got pushed to 15th of September. And I remember having conversations with you and Vishy that 15th is extremely important because there are some payments coming up before the end of the month and early October as well. Now it seems like that any kind of fundraising that IL&FS can do is at least a month away. Now, is this a perilous situation for IL&FS and for some of the people or some of the houses where the coupon payments or the payback is due before that 1 month period expires?
So, in the last couple of weeks, we have seen a couple of defaults from IL&FS. The latest being on September 14, where it has defaulted on some of the commercial papers, and this has been disclosed to the stock exchanges. You need to keep it in perspective that it was in August 29th board meeting that they cleared the consolidated results, and as a result of which they also agreed to raise equity through rights issue, which is there. Now, the issue with entire IL&FS is that they don't have enough ceiling to raise capital, so they have to go to the shareholders to an AGM where the capital increase can happen. They've asked for authorized capital to be increased from 1,500 crores to 1,600 crores, which is there. That allows them enough room to bring in a rights issue. They've also asked for additional 10,000 crores of borrowing limit, which is there, which also allows them to refinance some of the existing debt and go ahead and or seek line of credit from some of the investors like LIC and SBI. But there are conditions which the shareholders will impose, because there is a huge leverage which is there on IL&FS as a standalone entity and as a consolidated entity, and that would mean they would have to go for monetization of assets. Now, I don't think monetization of assets can happen within next 15 to 30 days.
True.
Because these are these are projects and land and real estate which they may be looking to sell, including their headquarters which is there in Bandra, BKC. But what we understand is that the board can only take a decision on the contours of fundraising after 29th of September, and that's and any payment that comes before that is likely that they may default. Now, the issue is that even after 29th of September, they may not be immediately able to raise the funds, because first, all the shareholders have to take the board permission to invest in the company. The rating of the company is already at non-investment grade or junk, which is there. So they will have to, some way shore up the capital or bring in money to help shore up the ratings of the company, so they can go and tap the bond market.
Who will put in the money?
That's a good question, because if it's a rights issue, then all shareholders should be putting it equally.
But shareholders are saying that, there's this PTA copy which is there on our website, Sajid, and the shareholders are saying that they've asked to raise funds by selling the assets or non-core business as a precondition for putting in additional money in the firm.
True. Non-core assets are not going to be sold in the next 1 month.
Right.
For sure. It will take at least a couple of months before it gets finalized. We don't know at what stage it is, but what we've been told is that there are multiple assets they are looking at to monetize it, and that's going to happen. My guess is that this rights issue will not be subscribed by all the existing shareholders. Only the top few will subscribe to it. But there is also condition there, because the existing articles of association does not allow the company or any of the shareholders to cross 25%.
Right.
Because in case it crosses 25%, they have to buy out the entire shareholding of other shareholders. So the amendment to Article Association, which also is supposed to happen at the 29th September AGM, is also important before they can take any necessary fundraising which that can happen. So it is going to be a wait and watch for all the financial institutions, because you have insurance, pension, provident fund, who all are there and sitting on a non-investment grade instrument, and it's unlikely that now the rating agency downgraded it one go, will upgrade it to above AA in another.
So I have one last question, Sajid, then. Whether mark to market or otherwise, do all the houses or some of the houses which house the papers of IL&FS stand the risk of staring at a default?
Well, I don't know whether default will happen or not. I mean, they are existingly happening. For CPs, they are happening. But I don't know whether it will continue post September 29th. But one thing is for sure that it will take at least a month before funds start coming in. Because
so until then, the payments are not going to happen.
If it's a big payment, it's not going to happen. We've seen some of the existing, creditors putting it in bullet points, monthly installment of HDFC and other. HDFC's 400 crore exposure is now divided into a monthly exposure on a, so that IL&FS can pay them. But I don't know whether they are paying HDFC or not. That's another question. But yes, there will be some refinancing of existing or line of credit coming from existing shareholders, and that's the only way it can survive. Otherwise, you'll have to get the rating up to at least AA for for it to come, or even if it wants the mutual funds to come in, it should be at least about BBB.
Well. So a bit of a catch-22 situation for IL&FS.
It is going to be a difficult situation for IL&FS for the next 1 month, and there's no way to say that that defaults are not going to happen. It's going to happen. It happened on September 14th for the CPs, and if any other CPs or NCDs are coming up for a redemption in the next 15 to 30 days, the likelihood of them defaulting is as well exists.
Yeah, well, conversations with mutual fund managers seem to suggest that there are large repayments coming up in the first week of October. So let's see, if it's delayed by a month at least, then we are staring at some problems.
Yeah, and the question is that if rating agencies stand by what current rating is, they may be little safe, but if default persists and they go and downgrade it to default, then it's going to be even more tougher for IL&FS to raise funds.
Okay, let's wait and watch. Sajid Bangat, thanks for putting that into perspective. That's IL&FS, and Sajid and team has been on top of the story, really, and given you almost every single update. A lot of these updates are there on the website as well, so if you log into bloombergquint.com and just simply search by IL&FS, you'll get a whole host of updates on IL&FS starting from about last week until yesterday. So do log into the website and take more stock of that. Well, taking stock, that's what the Prime Minister did. After the Prime Minister's economic review meeting, Finance Minister Arun Jaitley said that the government is confident of meeting all budget targets this year. In a press conference late Saturday evening, a short one I might add, FM Jaitley also announced a 5-point plan to cut the current account deficit, which would in turn strengthen the rupee. Now, frankly, again, if you just log on to the website, you will get all the details about the 5-point plan as well. The mandatory hedging conditions for infrastructure loans, permitting manufacturing entities to avail external commercial borrowings of up to $50 million with a minimum maturity of 1 year. They're removing the exposure limits of 20% of foreign portfolio investors, corporate bond portfolio to a single corporate group as well, company and related entities, and 50% of any issue of corporate bonds will be reviewed. So that's the third one. And then there are a couple of measures being taken on the exemption on, firstly, the exemption of withholding tax for issuance of masala bonds done in the ongoing financial year, and removal of restrictions on Indian banks' market making in masala bonds as well, including restrictions on underwriting of such bonds. So, well, 5-point plan. Let's discuss the impact of this on the current account, possibly current account deficit, but the immediate term essentially on the currency. And let's welcome in Anant Narayan. He's professor at SP Jain Institute of Management and Research and a very keen observer of the economy and the currency. He joins us right now on the phone line. Anant, so good having you. Thanks so much for taking the time out. Good morning to you. If the close of the rupee overnight on Friday is to be believed in the overseas market, the money markets have not really taken in a very gung-ho fashion the announcements that came in the 5-point plan on Friday.
Yes, Neeraj. In fact, the markets aren't impressed. If New York was not impressed, Singapore today morning is even less impressed after the Saturday's announcements. In fact, as we speak, the NDF market, the non-deliverable market, is indicating dollar rupee at 72.5, which is a good 60 paisa weaker than it was on Friday close. So, the measures kind of fell short of the expectations which had been built up, the hype which had been built up. And I guess RBI will probably have to step in early in the morning to ensure that the authorities don't look silly after having had this weekend announcements.
There will be a heightened amount of intervention today, tomorrow, or over this week by the RBI, Anand?
I think so, Neeraj. So look, one can't read the mind of Mint Street.
Of course.
But given the fact that there was so much of hype built up over the weekend, a 60 paisa, 70 paisa weaker opening on the rupee and maybe a test of the old highs on dollar rupee will simply not look good. Look, India doesn't have any reason to panic at the moment. We have plenty of reserves. We have plenty of, arrows in the quiver, so to speak, in terms of policies, etc., to manage core issues on current account deficit and maybe even fiscal deficit in the banking system. But these are addressable, and we can buy the time to take those steps. So, when episodes like this happen where the system and the authorities give the impression they can't understand markets, it doesn't bode well. You're simply devaluing the fact that you have so much of resources available with you. So I do think RBI will come in, and I do think more steps will come in. We won't stop at what we saw over the weekend. We'll probably be seeing more steps being taken to address immediate sentiment, as well as to try and address the current account deficit over the medium term.
Interesting. Anand, would you have expected something more? I mean, the reason I'm asking this is because all through the build-up on Friday, everybody expected big bang. Now, there are two ways to look at it. One, there is, as you said, there is no need for panic, and therefore the reaction is not the one which indicates that the RBI or the ministry believes that there is a panic situation as yet. So maybe that's a positive. But the negative is that everybody is expecting a lot more, and what's come out is a series of measures which may have a very near-term impact and not a meaningful medium-term impact. Would you have hoped for more?
Yes, Neeraj, look, the market didn't know what to expect because after all, this review was called by the government.
Right.
It wasn't the market saying, please do something, right? But one would have expected two sets of steps. One would have been something to immediately address the sentiment. Look, the reason for the government saying what it did was because we suddenly saw a daily fall of 1.5% in dollar rupee, which didn't really make sense. It was going beyond fundamentals. And we were nudging 73 at that point in time. So it was called for some kind of announcement, some kind of verbal intervention. So the first steps would have been, address immediate sentiment, stop the panic. There's no reason for panic. And the second set of steps would have been acknowledge there is a medium-term issue in terms of balance and try and take some actual steps which will work out over time. Now, on both these fronts, we didn't get enough. So the immediate so-called 5-point program, which was announced, was largely asking domestic entities to take a position on the rupee. That's hardly, I am not sure how effective that will be and how appropriate that is at this point in time. And the other set of measures was encouraging overseas investors to put in money into masala bonds and into, debt instruments. Again, not sure how effective they will be at this point in time. And the 5, announcements brought on Friday evening, 9:30 in that press conference, frankly, were not earth-shattering. They were announcements which could have been brought out by somebody in RBI rather than the finance minister of the country. So in that sense, there was a bit of a surprise from the market as a whole. Now, two good things which happened. One is a reiteration that they would look at the current account over the medium term, maybe look at, giving a fillip to exports, controlling imports. And most importantly, on Saturday, a very strong reiteration from the finance minister that the fiscal deficit target and the capital spend target will be adhered to. That's very, very important for the market to listen to. Having said that, the lack of details and the lack of actual steps being announced on both fronts, on the fiscal front as well as on the current account front, I guess left the market wondering what really has changed. So look, I don't think it stops here. I think we will see more steps coming up in terms of maybe import curbs, maybe in terms of SOPs for exporters, specific steps to improve exports and improve ease of doing business for exporters, and maybe something more to improve sentiment as well. We talked about an oil window, RBI supplying dollars to oil importers directly. Maybe that could be on the anvil as well. It's not perfect. It's still a distortion, but it might be something which helps sentiment in the near term.
Yeah, last done, I believe, in 2013. Anand, just the one measure that you said and which attracted, I was looking at social media, attracted a fair bit of criticism was the promise to curb non-essential imports to compress the trade deficit. Now, again, it may not be the picture perfect way, but when CAD is ballooning the way it is, are these measures which are the need of the hour, if not for the long term, then at least for the short term? Where are you on this debate?
I'm with you on Neeraj. Look, this is not ideal. This is not, it's not pretty, and it's not aesthetic. And I'm sure a lot of people will have issues with tariffs of any kind. The only people who seem to believe in tariffs right now are the Americans and President Trump in particular. Having said that, as you said, we aren't in a happy place. We are in a lose-lose kind of situation. Current account deficit for this year is expected at $85 billion. Even if we get FDI of $35 billion, we are still looking at $50 billion of core outflows. And something has to be done. Now, we can take medium-term steps to improve exports. And God knows there is work to be done on that front. Why is it that ready-made garments is languishing? Why is it that gems and jewelers aren't doing too well? There are issues there which need to be addressed. But again, in the immediate term, some steps do need to be taken. We are currently borrowing money to fund our oil, gold, and smartphone purchases. That's simply not sustainable. We can't be borrowing money for current expenses like this. So maybe something has to be done on electronics. Something has to be done on maybe even gold. And we definitely need demand contraction so that we don't have oil demand going up further. Now, these aren't pretty, but the nature of the context is like this, especially given the uncertainties, both global as well as local. We have elections, we have November, the Iran and sanctions issue coming up. We have global central banks withdrawing liquidity and raising rates. Given the overall context, some amount of demand contraction, some amount of control on demand for electronics, etc., in the short run has to be called for. But one hopes that eventually the steps which will pay dividends are the steps to improve Make in India and to improve Make for India.
Okay. Anand, so good chatting with you this morning. Thank you so much for taking the time out and being with us.
Thanks, Neeraj.
Well, that's a very keen voice on the currency and the economy, talking to us about what the near-term impact could be. If the NDF markets are to be believed, we'll start off weak on the currency, so might be in a position to actually give up all of those gains that we have had over Thursday as well as Friday. And the rupee's weakness has prompted Morgan Stanley to rejig its model portfolio. And that's the third piece on First Word. And the brokerage house feels that the currency factor has already played out for the Indian IT firms predominantly, which have clearly outperformed this year. That and a lot more in this note. Darshan is standing by to tell us by just how much and maybe more as well. Darshan, good morning.
Yeah, good morning, Neeraj. So basically what they've done is that they believe that, the rate of rupee depreciation will be much less than, the rate of growth these IT firms are. So that they're saying that the growth has already come in. The stocks have also moved up significantly. So that is why they have downgraded the sector to an underperform. And on their model portfolio, from a zero weightage that they had, they are moving to a negative 300 basis points. Surprisingly, to just point out, today morning, Goldman Sachs came out with their strategy report in which they have downgraded India, but they have upgraded IT, and it's the same reason. They are saying that despite the outperformance and the rupee moving, they believe that the trend will continue. So contrasting views coming in from two relatively large brokerages. But we're talking about Morgan Stanley, and this 300 basis points that they've cut in IT, they have given to consumer. Now they say that over the last month itself, consumer stocks have fallen significantly, given the fact that the expectation was much higher, given how rupee has panned out in trade. But now they are saying that the recent underperformance that is there it's a chance to boost, it's a chance to accumulate some of the consumer stocks, and that is why those 300 basis points go to consumer. So consumer was a negative 600 basis points. That's now moved to a negative 300 basis points. Now, as far as the other sectors are concerned, consumer discretionary, they are very overweight. They have a 500 basis points overweight. Consumer staples, they have put in 300 basis points, so that moved from a negative 600 to a negative 300. Financials, they are overweight. Industrials, they are overweight. But the other sectors like materials, utilities, healthcare, IT, they are all negative at this point of time. Individually on consumer discretionary, where they are 500 basis points, they're saying that the strong consumer loan growth and rising real income will drive growth for this sector, so they are positive on it. Financials, they're also overweight. They're saying credit costs may have been peaked. Recapitalization will help the corporate sector banks, but the non-banking NBFCs probably will face pressure given the fact that rates will increase. Industrial, they are saying that private capex is likely turning. Public capex remains strong at this point of time. Healthcare, they are not positive. They are saying that is impacted because of all the regulatory issues that are going on there. Utilities, they think cyclical exposure is preferred. And finally, energy as well as materials, they are saying that they are overweight on these counters. So basically, IT is something that they are negative on, and the basic point is they are saying start accumulating consumer stocks stocks given the fact that they have fallen significantly.
Interesting note, an interesting conflict of thought between the two large brokerages as well, though, of course, we were talking about Morgan Stanley right now. But Darshan, thanks for putting that into perspective. Well, that's the view from Morgan Stanley, or the changes to the model portfolio, but predominantly reduction of weightage in IT, and that goes on to consumers at the current point of time. Well, then on the RSI charts, Nifty IT seems to be overbought as well. We'll talk about that a bit later on. But that's all that we have on First Word for the day today. Lots more lined up on Indian Open. We talk about markets and the levels we are at currently with Bhat of Dalton Capital Advisors. More importantly, discuss the recent drug approvals and the U.S. FDA inspections and competitive intensity in the pharma market with Ramesh of Lupin. That's the big discussion that is slated on Indian Open today. But after this break, we'll take a full tilt towards the day's trade. Stay tuned to Bloomberg Quint Live.
Good news, got a promotion and a damn good raise.
Congrats बेटा।
वाह, रेज अब तो इंश्योरेंस पॉलिसी ले ले।
कौन सी कंपनी से लूं?
चूज वही जिस पर हो पूरा भरोसा।
That's good, but आज की generation wants everything online. Easy premium payment options, loan facilities और wide range of products.
पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना, same choice. LIC.
LIC trending with times. 62 सालों से हर जनरेशन की पसंद।
Dreamers. They're everywhere. You've met them, been to school with them, worked with them. They didn't seem different. Yet she's the one who surprised everybody. His crazy idea actually worked.
They are no different. They are you. When you take a chance on yourself.
These are the dreamers who found a way to run the engine of the world. These are the entrepreneurs. There is no formula. There is no right place, right time. There are no overnight successes.
But there is toil, there is preparation, and there is tenacity.
There is no end of the road, no obstacle large enough. There's just the vision and the heart that won't give up.
Because Aegons of business never stop.
Aegons of business never stop. Only on Bloomberg Quint.
September 15th, 2008. The day a titan of the investment banking world fell. An event so unlikely that when it happened, it shook the world economy. 10 years later, the world has picked up the pieces. Or has it? Bloomberg Quint looks back at the collapse of Lehman, its aftermath on India, and the recovery that followed. Lehman, a decade later.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here. There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that is sustained.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We're getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Good morning and welcome. You're watching Indian Open right here on Bloomberg Quint. A quick update on what's been happening across Asia before we move on to our market setup. Morning has not been all that good. So if you take a look at what's been happening on the Hang Seng, you've seen almost a 500-point cut. It's picked up from the lows. It was down almost 1.8% from there. It's picked up a bit. So at 433 points given up, the Hang Seng obviously is already in that bear market from its January highs. Shanghai is down about 0.7% in trade. There's a lot of selling pressure within the techs within Asia as well, and concerns regarding US's move to place a further tranche of tariffs on Chinese goods. Taking a look at US markets once again, so just to wrap it up, the US markets, though traded slightly in the green, but still no major cues coming out there. The S&P 500 flat, all of them, Dow Jones and Nasdaq as well as trading flat. Taking a look at SGX Nifty then, and the setup here seems to be weak, in tow with what the rest of the Asian pack is doing. 11,496 is the cue coming in for the Indian market open. But let's take a look at what happened in trade on Friday's session. The market seemed to be in a perky mood, but that did not uplift us for the week. So we were down for the week, but in intraday trade, there was significant short covering that came in on both the Nifty as well as the Bank Nifty. Darshan joins in with more details on that. Darshan.
Yeah, so Devina, I'll pick up from where you said, and two important things. There was short covering that was seen on Friday. There was no fresh longs that was seen. And secondly, look at the SGX Nifty, and the selling has only intensified from a 5-point cut. It's moved down to 50 points below the 11,500 mark in trade. So what we saw in the Nifty was open interest was down 2%. It was up almost 1.2%. Indicating there was heavy short covering that came in. It was even more intense on the Nifty Bank. Look at the Nifty Bank, open interest was down 17% and the index moved up almost 1.2%. So there was short covering, there was no fresh long seen. Now look at the wicks. The wicks is down almost 2.8%. Now a couple of points that I want to point out, and that's the open interest build up where positions are taken. Now look at what happened on Friday. On Friday, call writers actually shed positions all across from 11,400 right up to higher levels, and look at where put writers pulled in position. 11,500 is where they built in the position. So there was heavy put writing that came in, a significant amount of open interest build up that happened. Now let's take a look at where the total open interest is there. Let's pull up the total open interest, and that will give a better view in terms of where positions are taken. Now 11,500 has significant amount of put writers here, and 11,400 is there. Call writers are anyway active at high levels. That's a green line. Now the market is indicating that we are going below the 11,500 mark in trade today as per the opening. So these positions, this red line will come down. There will be significant amount of unwinding that will happen, and if it stays below the 11,500 level, expect the selling pressure to be intensified, because put writers will lose significant amount of money since their premium will go up significantly. Now two stocks in the F&O ban. One of them is Adani Enterprises, because of the sharp move that came in and the high open interest build up that we saw. Balrampur Chini is the second stock that comes in the F&O ban. Now the Nifty PCR moved up, the Nifty Bank PCR also moved up about the one level since the market moved up. A couple of stocks I want to point out. First of all, Balrampur Chini, it's in the F&O ban. Open interest build up was 43% because of the government policies. Open interest and the counter moved up 13%. So the buying intensity probably will slow down in Balrampur today. Amara Raja Batteries is seeing a lot of fresh shorts. Open interest build up of 14%. The counter was down almost 3% in trade. So that is seeing fresh shorts. Granules again back to levels of 120. Over the past few days we've seen it's seeing decent open interest build up, so probably the momentum will continue. And the final stock that I want to speak about is Tata Global. Huge amount of short covering. Open interest was down 13% and the counter moved up almost 5% in trade.
Wow. Let's see if some of these can manage to hold on a day which promises to start off lower. Darshan, thanks for putting that into perspective. Do watch out for some of those levels as well. Samir Kalra is founder at Target Investing with us on the show to talk about his thoughts on the markets and specific pockets of strength and weakness too. Samir, good morning. Thanks for joining in. Seemed very promising in Thursday and Friday session. The currency is slated to start off lower today. You reckon the start, while it will be lower, could only see further intensified selling during the course of the day?
So I think the Thursday and Friday moves were more led to going into the economic review meeting. The expectations were higher, that there were aggressive steps to be taken to control the price inflation and that. But I think the outcome has been passive. So there will be a disappointment over there. So we were already in a downturn from the peak. Now whether that stopped or reversed, I think today will decide it. So I see a further downside coming in.
So, it was interesting that in Friday's session, Samir, a bunch of pockets showed strength. The rupee sensitives, the oil marketing companies and the likes started moving up from Thursday onwards. In Friday's session, about 6% uptick for the BPHPs, IOCs of the world. Some of the NBFCs moved up in trade. You reckon that was a dead cat bounce and we'll see further selling?
Yeah,
the OMCs in particular?
Because see, over there the expectation and apparently what happened on the same day, Thursday night when India was closed, the oil prices drastically moved from a 79 to 77 because of the Saudi-led kind of increase number which came in. So both impacted on Friday to us, and that's why the OMCs were much higher than expected, and there was a certain price control activity which they thought that might come in, which didn't on the Saturday meet. So I think there is a certain amount of possibility of a reverse happening today.
I don't know if we've already mentioned IT. We were just talking about how there are some upgrades that have come in, but whether or not the growth will match up, or it's just the lift and the tailwind of the currency that everyone's factoring in right now. What are you viewing for IT?
So, as per the stock prices, it's more of the rupee depreciation which gets priced in until unless the results come in and the upgrade comes from the results. So, because right now the direction of the IT spending is not changing because of the rupee, and now you'll see a lot of IT having a higher margin pressure because of the cost increases. Because when they hire more of onshore in the US, then there are more salaries dominated by dollar now as compared to a year back. So over there also the cost pressure increases. So I think it's a wait and watch for this result to come in and see how the upgrades actually match up to the growth of the business rather than the currency growth.
In fact, I was just going through a report which said that aside from TCS, all the other big boys like an Infosys, a Wipro, an HCL Tech, only a TCS stands out in terms of the kind of earnings performances that they have already showcased. The others are banking on a large deal pipeline, but the lumpiness of the deal pipeline still exists. So for them to actually translate these deal wins into regular inflows could probably take more time.
So in TCS matter, if you see the deals wins happened 3 years back. That kind of a deal win was huge in number of their, the order book, let's say in that sense. So their transition from the order book to revenue came in a couple of years back. That's where Infosys was already facing management issues and the other issues. So over there, the deal winning happened currently. So that will again translate in a year later. So I think that's why they're now trying to go for inorganic spaces so that the growth doesn't get compromised. So I think somewhere the Infosys is preferred with us, and we prefer Infosys over the TCS. But I think TCS will be better off for a couple of more quarters out here.
Interesting. Since we're talking IT, there's a chart from the terminal that I've borrowed. It's the Nifty IT RSI chart. If you can just look at the chart from a technical perspective as well. The question mark is whether the Nifty IT RSI indicators indicate that the space is overbought. And let me take you through this chart out here and these RSI indicators, which clearly show that the last few days it's been bobbing above the mean numbers and looking like it is on a slightly overbought level. So we'll talk about this with our technical experts as well, whether Nifty IT is an index or some of the specific large caps look like the rally might come to a bit of a pause, if at all there is a pause in the first place. But the technical indicators do seem to indicate that there is some bit of overbought levels on the Nifty IT, thereby maybe on some of the large cap IT names, and maybe a small course correction could be expected. That the Morgan Stanley note might provide fuel to fire is another case in point as well, because typically when Morgan Stanley does these things and it's a large change in stance, there could be a bit of a reaction that we'll see today. The fact that the market is not too supportive might also work. But Devina, what if the currency were to go back to those lows that we've seen last week, and does that give a bit of a sentimental tailwind to IT?
Timing of RSI, the prolonged period over which it stays, can't be pinpointed. So you may actually have a prolonged period of buying for a month and a half, keeping in mind the tailwinds that they're anyways getting from the depreciating currency. So this is a factor that probably indicates to you that
it is overbought.
It's overbought, but
whether or not
you don't know, and what time that selling comes, keeping things constant, keeping the environment constant, you don't know, because the currency is still giving that tailwind.
Yeah, so there's opposing forces at play. RSI is just an indicator, but the Morgan Stanley note and versus what the currency depreciation does today. In Friday's session, the stocks were soft. Can the currency depreciation today bring about a change there? Should be interesting to see.
Yeah, but before we go ahead, let's quickly go across to our research team. They're joining in right now. They've got a lot to watch for. You've got some stocks in news. You've got numbers that have come out, a possible reaction. So a lot to highlight before we enter trade this morning. Both Shraddha and Saloni are here with us. What's on your plate, Shraddha?
REC reported its numbers on late Friday evening. It was a weak quarter as was expected. So the net interest income for the quarter was down 10.5%. Even as the yield on advances fell at a much sharper rate than the cost of funds for the company. Net profit, on the other hand, increased by 36%. That's largely to do with a higher other income component and lower impairments. But if you look at the net interest margin, they've come off by about 90 basis points to 3.72%. The loan growth was healthy at 16%, but sanctions for the quarter fell by 45% and disbursements declined by about 8%. Overall, the coverage ratio under Ind AS is now at 47% as compared to 21% in March. But once again, the gross NPA number also saw a rise on a sequential basis from 7.15% to 8.12%. We have Deutsche Bank, which has said that they expect sharply lower credit costs in FY19 because the coverage ratios are now comfortable. They've maintained their buy with a target price of 155. So weak numbers, but expected.
All right, REC, that's the stock in focus. We've got a lot more stocks to talk about in stocks news, Saloni.
So, Devina, first stock on my list is Infosys. Now, the company has acquired 100% stake in cloud consulting and training services company Fluido for 65 million euro. That's about 550 crore rupees. So, this acquisition is to strengthen company's cloud capabilities and its presence in the Nordic region. That apart, Cipla's Uganda arm has raised 16,650 crore shillings from its IPO listing in Uganda. Now, the market cap will be around $250 million. That's according to Bloomberg News. Sterlite Technologies is another counter that will remain in focus today on the back of plans of its capacity expansion. The company will be doubling its optical fiber cabling capacity, and for this they will incur a capex of 320 crores going ahead, and the enhanced capacity is expected to come online by June 2020 in a phased manner. We also have GVK and GMR. That's on the back of ET report. AMP Capital is in final talks to buy stake in GVK's airport business at a valuation of around 3 to 3,500 crores. GMR Infra is said to be in negotiations with Lone Star to offload stake in airport business, so that counter will also remain in focus. And lastly, in terms of bulk deal in Fortis Healthcare, Goldman Sachs Singapore bought 0.5% stake in the company. So we will keep an eye on this counter as to how it reacts in trade today, Devina.
All right, guys, thanks very much for that. So a lot many more stocks to watch out for as we enter trade this morning. But Samir, quickly coming to you, REC numbers.
So if you see the numbers, the major profit growth came through the other income. If you see the loan growth, these were I'm expecting more of refinancing kicking in, because if you see the disbursement and the sanctions have dropped drastically. So I think the newer sanctions are on hold, and it's more of a refinancing of the working capital of the current loan book. And I think till the time the power assets financing is not resolved by the government and the RBI together, I think it's better to stay away from REC or PFC at the moment.
Okay. Sorry, you want to take, okay, stay away from REC and PFC at the moment. Just one thought on the large NBFCs which rallied in Friday's session. Near-term tactical calls on, say, an Indiabulls Housing Finance or a Mahindra & Mahindra Financial Services or a couple of these others which shot up?
So I think in the short term, maybe for a trade up, there might be spaces to see a uptick. But if you see now on the longer term, their cost of increasing the NCDs have already increased by 100-150 bips, various NBFCs, which reduces your scope of the NIMs to expand further at that speed which has done in past couple of years. So I think these rate hikes result in two things. One, the NPA increasing because the delinquency is increasing at the speed of the loan growth they have given. Second, the cost of funds which they were easing on or benefiting from, that goes out of the market. So I think now it'll be very pick and choose kind of a matter to be where in these NBFCs rather than being the whole bunch and carrying it forward.
But you have looked at individual stocks, anything in particular?
So we own Bajaj Finance for a long time. That's the only NBFC exposure we have right now.
Well, that's a very safe stock. There's nothing that can go wrong there. Obviously, for the last few days, the stock has been under pressure. Valuations have come off, but Friday session once again saw the stock up 3%. Let's get in our technical experts now. We've got Amit, Harchekar and Ruchit, Jain, both of them joining in right now to take us through index calls as well as calls on a few stocks that they might have. Good morning, gentlemen. Ruchit, I'm going to start off with you. Your call on the Nifty first.
Yeah, hi, very good morning, everyone. Certainly, if we see last 3 weeks, then that they have been quite identical when it comes to price correction. Initial couple of trading sessions, we have seen a selling pressure building on the markets, and last 2-3 trading sessions, market recovers those most of the losses. So I think, but if we see this entire corrective phase of last 1 month, this correction has been a 5-wave decline, and usually when we see a 5-wave decline in price corrections, there there happens a time correction as well. So we are expecting this 61.8% retracement, which is around 11,565 to act as a resistance. So we might see some more up move during later half of this week, wherein markets would go up to 11,565. But since this would be just a retracement pullback, short-term traders with any long positions should look to lighten up their longs around 11,560 rather than creating fresh longs over here. So at current juncture, we are not advising to create any fresh long positions in Nifty. In fact, on rise around 11,560, one should look to exit the existing long positions as well.
Okay, being slightly cautious out there, so use higher levels to exit additional long positions. Amit, is that advice that you're advocating too?
Yeah, very rightly said. See, I'm watching the open interest data, and in last 4 days, we have seen reduction of around 19 lakh shares of open interest in Nifty futures. Earlier also, I had mentioned that whenever you see a fall in open interest on the index side, that is a sign of concern. If we would have seen a good open interest addition in last 2 days of move, then the move could have turned quite solid. Now, since the positions are getting lightened up on the rally, there is a possibility that market could be poised for another decline of around 300 to 400 points. So from a very trading perspective, since most of the long positions at the beginning of the series were accumulated at an average price of around 11,620, that would act as an important turning point for this market. So we would advise turning your position on the short side, keep a stop of 11,620 on a closing basis, and expect target of around 11,300 in the near term.
What about your stocks, Amit?
Well, I have 2 sell calls and 1 buy call. First sell call would be going short on Reliance Industries futures. Year too, we have seen a significant decline in open interest in last 5 trading sessions. Hence, we are expecting further decline in this stock towards 1180 to 1170. Now, stop loss for your short trade would be at around 1285. Second stock would be going short on State Bank of India futures. Again, the moment the stock has breached levels below 288, we have seen massive decline in open interest, and we now feel that stock is heading towards 274 to 273 levels. So what we would suggest keeping a stop loss for your short trade at 299, because 298 turns out to very important turning point for this stock, and remain on the short side. And last would be a conditional buy on Power Grid Corporation. Here we are seeing a very strong reversal, and there is a possibility that if in today's trade Power Grid manages to sustain about 203 on futures, we can expect further long build up, and this rally could easily extend to 210. So for Power Grid, if the long gets initiated, the stop loss would be 196.
Amit, Ruchit, what are your strategies? I believe you've got one sell on Just Dial and a buy on UPL.
So when it comes to stocks trading, one of the best strategy in such scenarios one should do is to buy those stocks which have been outperforming and sell those stocks which have been underperforming. So Just Dial is clearly one of the underperformers since last few months. A broad consolidation phase was seen and the prices have recently given a breakdown below the support end of the consolidation phase. The only support that is providing right now is its 200-day moving average, but the way all the other parameters have been panned out, such as RSI and all that, we believe that this 200 DMA would be breached in next few trading sessions itself. So one can go short on Just Dial with stop loss above 541, expecting at least targets are around 496. And UPL is one of the stocks which has been showing outperformance even when the markets were correcting in initial 2 to 3 weeks. So even when during markets correction the stock is going up, that is a positive sign, and the up move has also been supported by very good volumes. On the weekly charts, there is a breakout above its falling trendline resistance. So UPL is one of the stock where one should look to go longs, keeping stop loss below 709. The first target is seen around 763. Where partial profits could be booked, and if we see the stock crossing above 763, then 784 would pan out as second target areas.
All right, so a lot of strategies to keep an eye out for as we head into trade this morning. But onto a special segment now, Bloomberg Edge, where Jayesh Kilnalni tells us about a pattern that the Bloomberg terminal has thrown up on a particular stock. Jayesh, what's the stock today?
Morning, Devina. It's Axis Bank, and there could be a possible double top formation, and the fear and greed indicator has also turned negative as of Friday, indicating a sell signal. First, let's have a look at the fear and greed and the theory behind it. It's a proprietary Bloomberg indicator which uses the spread of two weighted averages of the true range as one of the key inputs for calculation. It oscillates on a zero baseline and therefore becomes very simple to interpret. All you have to do is watch out for positive and negative values, which are denoted by green and red color respectively. You buy when red turns into green and you sell when green turns into red. And this is exactly what has happened on the chart of Axis Bank. But not only that, let me show you a few other interesting things. So near the 660 mark, you can see this double top formation. Sometime in August, there was a top over here. And once again, we tested the same kind of levels early September as well. Now, what is interesting is two candles. One is this green candle. You can see there is a longer top over here, which means that the price actually managed to go higher, but it could not sustain and fell back again. Now you shift focus to post the top management change that we got. Now see this red candle, and there is no shadow on top of this candle, which means that the open price was the highest price on that day, and the stock managed to decline from those levels. And as of Friday's close, we can see that the bottom panel will show you there is a red bar over here, and this means that there is a sell signal because it has flipped from green to red. So some interesting candles and a chart pattern, an indicator which turns negative for the stock.
Okay, and Jayesh, what's the efficacy of this indicator for Axis Bank?
Neeraj, works very well. Around 70% of the times the trade has been positive on the downside, with each trade giving you more than 3% result as profit.
Interesting. Thanks a lot for that, Jayesh. Well, Ruchit, just come in on this one. Axis Bank individually, it's ever since the announcement has come in, the stock has been sideways. Is there a possibility of some downside? Would you look at initiating any trade here?
Since the month of July, the stock has moved higher from 530 to 670. And if we see this up move, then on every correction within this uptrend, the 20 days exponential moving average has acted as a support. So whenever prices decline towards this 20 EMA, they take support and again resumes its uptrend. Even during last week when the prices had consolidated, the 20 EMA has acted as a support for this stock. So the first signs of the breakdown or of a corrective move would be prices trading below its 20 EMA, which is now placed around 625, 627. So if we see the prices declining below 627 mark, then certainly we could see some good price correction in the stock. So if any long positions are there for traders, then 627 or 625 should be kept as a stop loss. And once prices breach these support levels, then definitely fresh shorts could also be initiated.
All right, just stay on with us, gentlemen. It's the second IPO from the Indian Railway stables. Ircon International, which is an engineering and construction company, is looking to raise a little less than 500 crores from the primary market. So Amit Sarkar is here to take us through the details of the offer, which opens for subscription today. So Amit, what are brokerages saying? Is this a subscribe?
So I'll tell you about the offer and what's about the company, and then I'll tell you about the brokerages. So if you see, the company is looking to raise close to 467 crore rupees at a price band of 470 to 475 rupees, and at the upper end of the price band, that is 475, the company will be valued at close to 4,500 crore rupees. Now it is an engineering and construction company, and for FY18 the company's order book was close to 22,400 crore rupees, of which 87% of the orders were received from the railways, while the remaining was received from road, electrification and building projects. On the revenue side, if you see, it gets nearly two-third of its revenue, that is close to 75% of its revenue from the railways, while the remaining comes from road, electrification and building projects. And over FY15 to FY18, if you see, the company's order book has grown at a compounded annual growth rate of 30%, and for FY18 the order book was close to 22,400 crore rupees, which provides a revenue visibility of more than 5 years. Now if you see on the financial side, the company's revenue, net profit and EBITDA has declined over FY13 to FY18 at a CAGR of around 1%, 12.6% and 13%, and this was due to a fall in international orders seen in FY18. But over FY16 to FY18, that is over the last 3 years, all the three, that is revenue, net profit and EBITDA, have seen growth for the company. Now on the balance sheet side, if you see, the company's total debt is close to 3,200 crore rupees, but it is a pass-through debt, so technically it's a debt-free company, and its book value per share is close to 400 rupees, while the cash on books is close to 1,200 crore, which translates into a cash value per share of close to 128 rupees. Now if you see on the return ratio side, compared to FY17, all the three return ratios, that is return on equity, return on capital employed and return on asset, have expanded, and for FY18 the return on equity was close to 11%, return on capital employed was close to 6.1% and return on asset was close to 4%. Now if you see, the company has also been paying dividends continuously. For over FY14 to FY18, the company's dividend payout has increased from 24.4% to close to 47% in FY18.
All right. And how does it stack up against its listed peers, Amit?
So technically it does not have any peer, but we have tried to compare it with other government companies, that is NBCC, Engineers India and RITES. And if you see on valuation for FY18, the valuations are not at all expensive. The price to earnings for FY18 is close to 11 times, price to book is 1.2 times, and EV to EBITDA is 7.3 times, and it is cheaper compared to NBCC, Engineers India and RITES Limited. And lastly, on the brokerages, if you see, all the brokerages have given a subscribe rating. Well, also two of them, that is Motilal Oswal and Centrum, are expecting a good listing gains also from this IPO on the back of its reasonable valuations, robust order book, healthy financials and the growth opportunities going forward.
All right, so Amit, thanks very much for that. Samir, do you have a call on
So I think we'll avoid it given on two stands. One is the order book is dominated by railways. So that execution now in the election year slows down, and there are state elections as well, so you're dependent on the state and the center elections for the next 1 year. So that kind of increase in order book also slows down. So, and secondly, if you see, the profitability has reduced, the margins pressure are there. So over there, if that margin pressure is coming when they are listing, I would like to see a couple of quarters when they are already listed. Right. So maybe that margin pressure is kicking in now. So there might be next couple of quarters where the margin pressure actually kicks in because the cost of material is going up for them. So I think over there are 2-3 things which I would like to hold for a couple of quarters before taking a call.
Okay. Can I ask Amit about a usual suspect today? Amit, the Nifty IT, what would be an apt trade today?
Well, I think there is a good possibility of it moving lower, because in past few days we have seen a good bearish engulfing pattern there, and if you see the correlation of Nifty IT, it's almost having around 88 to 90% correlation with Nasdaq. I think so far we haven't seen any correction in US markets, but with Nifty breaching the crucial support of 11,500, I think there is a possibility that Nifty IT could correct by 4 to 5% in the coming week.
It'll be interesting, Devina, today. IT one, the oil marketing companies, the other ones, and let's see what happens today, because Friday was a big bang move for them. Do they correct a bit, partially because of the currency and partially because of the crude gains also cooling off a little bit. So 2 or 3 currency sensitives, all sensitives, firmly in focus when the markets will start off lower today as well.
Well, we're almost approaching pre-open, so about 25 seconds left to go. Let's quickly take a look at what's happening in Asia. Last time we took a check, Hang Seng was down closer to 430 points. That's exaggerated a little bit more. 463 points given up on the Hang Seng. The Shanghai is down about 1% now, so that's also expanded in terms of losses. For SGX, we're still perched about 0.5% lower, 11,492, indicating a softer start for our markets as well. So that's there on your screen. The Nifty opens up 0.33%, Sensex at 38,290 at first count. So just wait for a few moments, let that cool off a bit. Now it's back in the red for the index. So 11,509 on the Nifty now, giving up those initial ticks of gains that it saw. Amongst the stocks, and what kind of losses some of them are seeing, M&M on the index is down 2.5%, Z is down 1.5%, Tata Steel is down 1.2%, Yes Bank's down 1.1%, Tata Motors, Sun Pharma, UPL, Tech Mahindra, all of them looking slightly weak in trade today. ONGC now stacks up as the top loser. It's down about 3%. IndusInd Bank, Yes Bank down 1.2% apiece. Hero MotoCorp from the auto space also losing ground. BPCL is down. L&T, ITC looking weak by about 0.1% apiece, so not too much. But as you know, in today's session, at least in pre-open, it looks almost even Steven in terms of the breadth of the index and the advanced declines. Cipla is up about 5% in trade this morning. There was some news about its Uganda arm raising 16,400 odd crore shillings. That stock's up about 5%. Hindalco, Bharti Airtel and Reliance, heavyweights there, also contributing. Infi is up 1%.
Currency, Devina, that's the strong one to monitor today, and it's open week. 72.53 now. We don't know if the intervention from the Reserve Bank at some point of time will come in today and will come in a heavy way or no, but the gains over the last 2 sessions on the expectations of some concrete measures being taken have quickly been blown away really in today's session. 1% off already. Let's wait and watch what happens there, but this is not a good start. The yields, I don't think they've reacted too much. So the 10-year yields are okay, lying very, very flat. So no changes, no material changes, they're none expected. But the rupee, well, 72.51 is not something that most people on Friday's close would have anticipated to come in so quickly. So yeah, that's a bit of a disappointment. So this is the market verdict really to all that's happened over the weekend, which is Friday and Saturday. Not that this was unexpected. The NDF markets in New York in Friday's session as well as Singapore today were already showing that. The question mark only is whether this will worsen and this could spiral slightly out of control in the near term, or will we see RBI intervention coming in a bit later on. And simply seem to believe that that is going to be par for the course. You will see the Reserve Bank coming in and intervening materially in order to give some semblance of sanity to all the moves that have been taken as well. So
depending on whether they believe that this is probably is not the right price for the rupee, and the rupee should probably be stronger from these levels, because most are actually considering the rupee, this to be a fair valuation for the rupee. And also probably, you know, the market was anyways expecting a lot from this weekend's PMO meet, and something that could come out from the meet materially to help support the currency, but nothing on that front has really cheered the market. So when it actually went from a 72.9 to a 71.89, that was the initial anticipation of what the government would step in and do. But that was a damn squib. So
yeah, more long-term measures, more small measures as opposed to any big bang checks. But as most experts believe that this was the first line of defense, will the Reserve Bank and the government move to the second line and the third line at some point of time over the course of the next month? That remains to be seen. So the currency remains the biggest talking point in the session today. And we'll of course get in, we've already gotten you a bunch of experts. Log onto the site as well for some more updates, but it will suffice to say this will have some bearing on the market too. IT seems to have started off on a reasonably good footing. At least the pre-open rates, the first 3 minutes seem to suggest that. The likes of Infivipro seem to be doing okay. Just one pack before we move on to our guests again, and that's sugar. A very strong moves in Friday's session. Let's see if those continue in today's session or no. Well, Balrampur Chini is stock in the band, but the others should come up on your screen, the Dhampur sugars, etc. They seem like starting off on a good note. Let's wait and watch if that happens or no. These could be initial rates. Let's wait and watch what happens. Any big winners or losers at the broader end of the spectrum? You know, the IL&FS groups, the IL&FS transport stock starts off another 5% lower. Shouldn't surprise too many people. No, aside of that, not too many big movers in the session today. Quick initial thoughts though. Ruchit, let me come to you. If indeed the currency has started off, let's assume it stays this way. We already got a call on Nifty IT as an index. What about the two large caps, Infosys as well as Wipro? How do you trade them today?
I think if you see Infosys, there's last entire week, this stock has consolidated in the range of 747 to 725. So usually when we see such range-bound activity, the next directional move depends on the direction of the breakout. So whether the 748 resistance is taken out first or 725 support is broken, that needs to be seen. So if one has to take a fresh trade in Infosys, then wait for a breakout. If 725 is breached, then one can go short, and in case if 748, which is the higher end of the range, gets breached, then one can initiate fresh long positions. So which direction the consolidation breakout would be seen, that would be crucial to take a trade on Infi. And as far as Wipro is concerned, during last week, Wipro has shown a good outperformance, and in fact, if you see on the closing basis, the previous highs of January 2018 has also been breached. So I think this positive momentum is likely to continue going ahead. 345, 350 range could be seen in Wipro in this week.
All right, that's Wipro. Should pull up a Tata Motors as well and see how that stock's been trading. I remember a heavily beaten down stock, probably has lifted from about levels of about 256 or something and come to about 264, but way off the highs for Tata Motors. Samir, in light of what the management of Jaguar Land Rover has indicated, if they don't get a proper deal during Brexit, impact of 1.2 billion pounds per year for the auto industry, and particularly for Jaguar Land Rover, could be heavy. How would that read into something that you could do with the Tata Motors? Is there more pain?
So I think actually we've started buying it. And bits and pieces, not a chunk. Over there, what's happening is, if you see the EU commentary last week, they have shown that they are willing to give them a Brexit deal. Even the UK government is there. But the UK opposition, which is the Labour Party at certain point, is opposing any kind of Brexit deal. So if that goes to vote, how that vote outcome is more important rather than EU giving a fair deal to UK. That's almost, I think, done and through with, because they are going to announce an event in November to sign it up. On the auto industry, even Aston Martin has come into play last evening to show the impact. See, I think that quantum kind of an impact will be only if that situation comes. Now the only point is, if you see Jaguar, they have already lined up a good amount of R&D expend over the next 3 years on the Jaguar side. So that is any which way going to be incurred. And right now the volumes are slowing down and there are tariff issues. But if you see last month, there is some kind of an improvement coming in US patch and the Europe patch. The China patch is still downwards, and I think in a couple of quarters it will come back because of the base impact.
A few months back, they had delayed their shipments to China to get some duty, favorable duty.
So what that happens is that when the duty cut came in, they were pushing the stock, and that time there was kind of a refund or a rebate kind of a duty which they had to take up. So that paused the shipments to China, but I think still China numbers will be lower as compared to US and Europe. So I think over there might be kind of a disruptions, but I think maybe another 20% down or a 15% down will be there. Because we start buying when we see a 40% down in the stock and we start accumulating it. Because right now it can be lower in your portfolio, but it's somewhere the valuation, because I give benefit of doubt to the domestic story going on. They're almost neck to neck to Mahindra and Mahindra in terms of PVs. So I think over there the story is changing while the more pressure is on the JLR, which is out of anyone's hand to be rectified. So I think.
Well, what else? PVR seems to start off on a decent note, about 1.5% higher. The CLSA upgrade out there might be working for the stock, so do watch out for that one. And by the way, as the pre-open rates have settled down, we seem like starting off in the way the SGX was indicating. So the Nifty could start off about 0.5% lower. The Nifty Bank in and around the 27,000 mark, so down about 0.5 or 0.6%. That seems to be the order of the day. Let's see if there is more in store. For people who've tuned in right now and just want to know, Amit, what's the best index trade today? Is it the Nifty? Is it the Nifty Bank? Is it the Nifty IT? Or is it something else?
Well, I would still prefer Nifty futures. The reason why, as I said, a decline in open interest is not healthy for any stock or any index. And if you notice very closely, even USD-INR had seen open interest cut from 31 lakh shares to around 30 lakh shares, despite a very strong decline in USD-INR. That was also a warning signal that the downtrend was very short term. Now this has opened a near-term target for USD-INR towards 74.6, and if that happens, we should expect Nifty well below 11,300 in the coming days.
Okay, to watch out for the index. That seems to be Amit Harchekar's preferred index for a trade. Less than 5 minutes to go for the markets to kickstart trade. Let's tell you all that you need to know to stay ahead in trade today. Let's start off with the earnings that came in over the weekend. REC's first quarter earnings met street estimates. Loan growth remained healthy at 16%, while gross NPAs rose by 1 percentage point sequentially.
Stanley Technologies will be making an addition of 15 million fiber kilometers to its optical fiber cabling capacity, doubling it to 33 million fiber kilometers. The expansion is expected to come online by June 2020 in a phased manner.
Ircon International Engineering and Construction Company will be launching its 3-day initial public offering today. This is the second IPO from the Indian Railway stable. The company is offering 99 lakh shares at a price of 470 to 475 rupees apiece.
Aavas Finances is also looking to increase its capital base to give partial exit to promoters and investors. IPO price band of Aavas is fixed at 818 to 821 rupees.
In bulk deals, promoters raised stakes in IRB InvIT Fund, while Goldman Sachs bought 26 lakh shares in Fortis Healthcare.
Drug maker Cipla's Ugandan arm raised $250 million via an IPO in the East African country. Cipla's market capitalization will be around $250 million now, according to Bloomberg News report.
Okay, as we get ready for market open, a stock that somebody can invest in, I think that would be the key question. Samir, one name that you believe you can put fresh money to work in currently?
So there's this company called Igarashi Motors. They're an auto comp company. They're owned by Japanese earlier and now sold to the MD and his own promoter company. And there's a part of another unlisted company of the same promoter being merged into Igarashi Motors. So that pushes the valuation from currently a 35 to around 25. And it's a debt-free company. It shows around a 25% kind of ROEs, and it's into motors. So a lot of motors go into the and Maruti is the biggest supplier customer for them. And over there the diversification is happening because the merging entity is export oriented. So over there a lot of Volkswagen and BMW level motors are there. So I think over there's a lot of unhindered value in that stock. The liquidity is the main issue from my point of view. But I think if you start buying in SIPs and that kind of accumulation is there for a long term, I think that's a one bet I would like to take. And we have taken it.
On a comparative basis, what about a Talbros Auto? Because we seem to be getting a lot of queries on that one.
So if you see, Talbros is more into the chassis and the body of the car. So that kind of a technology led is more into the JVs, and that valuation is much more lower. So that's why Talbros does a 18 or 19% kind of ROEs. Though there are benefits of Talbros kicking in from Maruti and other places, I think the main trigger for Talbros will be the quarterly cycle. So we have that also, and we are more of Autocom favorite kind of places. So I think Talbros is somewhere expensive now, but you can look for any kind of a correction to build upon.
Okay.
Samir, we'll let it go at that note. Thank you so much for taking the time out and being with us today. Well, Igarashi Motors is the fundamental idea from Samir Kalra in the session today, but less than a minute to go. So time now to nail it down to the top call from our experts. Amit, to you first, your top call for the morning.
Well, first would be going short on Bank of Baroda futures. Reasoning, good amount of short addition. Here, stop loss would be 138. We are expecting target of 124. Second would be going short on Tata Motors. Stop loss would be 275. We are expecting the stock to decline to 255.
All right, and Ruchit, what about your top calls?
Well, I would recommend going short on Reliance Home Finance, a reversal pattern on the weekly charts and gap down opening today. So one can go short on Reliance Home Finance, keeping stop up of 67 rupees, expecting target around 62 and then 60.
The top calls from Amit. Gentlemen, stay on. Just taking opening thoughts from you post-open. But here's how we're starting off with a fair bit of red on the screen, 0.5% at least. The Nifty Bank about 0.7%. So in line with what the SGX was indicating, and probably in line with the currency as well, and weakening further now and weakening quite quickly. So, 0.2% in the red for the Nifty and the Sensex. The Nifty Bank down 1% already. And well, maybe more in store too. The mid caps and the small caps, I doubt, are bereft of this as well. So yeah, about 0.8% down for the Nifty mid cap. The small cap index a third of 1%. A fair bit of red. The heat map would be showing that. Must be very little green on the screen, I presume. In fact, yep, just about 4 stocks or 5 stocks in the green, and IT right up there. All of those names which had taken a bit of a back seat in Friday's trade, a bit of a pause, marginally higher in trade, no gung-ho moves, but in the green. But look at the red on the screen. It's really across the board. Can't spot a single pocket, save for IT, which is showing any resilience. Indiabulls Housing, the top gainer in Friday's session, is down now. The top loser, Yes Bank, has corrected about a couple of percentage points. Tata Motors, amongst the top calls, is down 1.5% already. So I don't know if viewers got a chance to execute that trade. Reliance Industries and HDFC too down in the red. Essentially a lot of red, very little green. Only the top 5 IT names marginally in the green. Quick pockets of strength or weakness and top movers in Friday's session. Just bring them up before I hand it over to Devina as to what's happening at the broader end of the spectrum as well. Firstly, sugar, and the strength continues. There's amongst the top gainers in Friday's trade, and those stocks continue to gain today as well. So the market sees some impact of the moves that have been taken, and therefore rewarding these stocks. 3 days on a trot now, the stocks have done well. A couple of stocks in news and some brokerage notes. So firstly, CLSA downgrade coming in on Cadilla. That stock starts off about 1% lower in trade. What else? Maybe the rupee sensitives and mid-cap IT2 should come up on your screen. All of them start off marginally positive, but no big moves really. So the market weakness, I think, weighing in almost all pockets, save for sugar. Devina, are you spotting anything different?
Well, it looks like it's a down day for the IL&FS group companies as well. So you've got IL&FS Transport, which is down 6.5% in trade right now. The group entity will have to wait for further fundraising till the end of the month at the AGM on September 29th. Unitex down about 5%. Radico Khaitan is down 3%. You've got Delta Co-op, which is down 2.5%. JP Associates dips 3%, HCC, Marksons Pharma, Berger Paints down 2%. You've got the likes of a Shipping Co-op and Andhra Bank down 1.7, 1.8% apiece. Shrey Infra, Syndicate Banks down 1.5%. PTC India, Raymond, United Breweries is down 1.25%. Wellspun Corp, Jet Airways loses about 0.5% plus. First Solutions from the mid-cap IT pack is looking weak. Bajaj Hindustan, 20% uptick. We've spoken about the sugar pack, but the uptick is quite significant in the likes of Bajaj Hindustan. Berhampur Chini is up 5%. Remember, Berhampur Chini enters the ban period in the futures and options space. Sterlite Tech is up 2%. You've got Moil, you've got KPIT Tech, VIP Industries, and Hexaware, which is up about 1%.
Well, some pockets to watch out for, but just opening thoughts from our experts before we thank them. Looks like it's only IT stocks which are doing well, and maybe some tinge of green to Sun Pharma. Ruchit, opening thoughts either on the index or on any specific stock that pops up on your screen as a trade?
Well, certainly opening for the index doesn't seem to be much positive. In fact, if you see the Bank Nifty index, then this seems that the Bank Nifty index could show some underperformance and correct more sharply than Nifty. Because if you see during last week, then when Nifty and Bank Nifty both opened gap up in Friday's trading session, Nifty is still trading around that gap area, but Bank Nifty has already breached the lower end of the gap. And we all know that when the markets had corrected in last 2-3 weeks, the Bank Nifty had shown underperformance. So I think if we see some further correction, then Bank Nifty would see some more sharp selling pressure. And on the low side, we could retest the 26,600, which was seen during last week. So Bank Nifty index is one where one can initiate fresh short positions, keeping stop loss about 27,070 and expect targets around 26,600.
All right. Amit, your opening thoughts?
Well, I would be trying to concentrate more on currency. My fear is if we see open interest addition in USD INR future, that would clearly provide a direction that it would be heading for at least 2 to 3% depreciation for a rupee, and Nifty could be easily sliding below 11,300. Basically, the best way to analyze this market is from 16th of July, if you calculate the VWAP of Nifty futures, that forms at around 11,478, which means whatever long positions was created in this up move, that would be forced to unwind, and that could trigger even a fall of 500 points in the Nifty. So one needs to be extremely cautious. Unless we do not have a convincing closing above 11,620, the direction should be on the short side.
Got that, gentlemen. We'll leave it at that. Thanks very much for joining us, Amit as well as Ruchit. Thanks for your opinion. Time to get in another important voice. You are Bhat, Managing Director at Dalton Capital Advisors, joins us on the show right now. Mr. Bhat, thanks very much for taking out the time. What are you making out of the current market setup? More focused right now on what the currency has been doing, as well as a few other macro pressure points that the government is trying to tackle right now. Were you at all enthused by some of the announcements that came over the weekend?
Well, I think enthused to the extent that the government took notice of this. Yeah. But I think the measures were very, very half-hearted. I mean, they really don't address the issue to any significant extent. But I think the fact that the government is closely watching this and probably will come out with more measures if required, I think that's a good sign. So therefore, to that extent, I think that's all we have to give credence to those measures. But otherwise, I think even the rupee is not terribly out of kilter with the REER now. So therefore, there is no fundamental reason for it to depreciate dramatically from here. So I think it will find support somewhere, 72, 73 levels. And unless there is further pickup in oil prices or something like that, I think it should sort of stabilize around these levels.
Do you think that this is just probably an over-exaggerated sell-off in the currency in respect to the emerging market currency sell-off, or this is fair?
I think, in the interest of our trade balance, I think we should have the rupee at somewhere near REER, and I think it is there. I mean, it was terribly out of kilter with REER for quite some time now, and that this depreciation has brought it somewhere there. And I
72,
think
73 is
where it is, and I think even the RBI should be concerned that it can. I mean, exports have to increase, means you have to have it somewhere near REER, and I think it is there. So therefore, I don't think there will be too much of pressure from a fundamental viewpoint, but technically there could certainly be, if tomorrow oil prices go up by another couple of dollars, I think there may be further pressure, but not otherwise.
Interesting. Mr. Bhat, what does all of this do to the market valuations? Sure, the micro is working, but can a strong micro withstand the volatility that stems because of a busy political calendar over the course of the next 3-4 months, not just locally but globally as well? And to these macro stress that we're talking about, would a par for the course move take the Nifty way lower than where we are right now?
I think possible, because if you really see, inflation is under reasonable control, and even the fisc seems to be in reasonable control. It's only the export front we have, on the balance of payments problems we have. Export has, of course, August has been quite good, but otherwise, generally this year, exports have not been all that good. But I think it's more of the international situation that is really causing us problems. The continuing trade war, and I think probably it's going up one notch again. That plus you have situation in Iran.
The conversation all through, I mean, we're talking to a few international brokerages as well, Mr. Bhat, and everybody believed that if the trade war takes the center stage of investor opinion across the world, then India is actually in a sweeter spot because of the intrinsically domestic-oriented economy.
Yeah, that I think in the medium term that is certainly the case. But in the short term, volatility will be there, and India will not remain immune to that. That is one. But again, as you said, even domestically, the only concern is the emerging election calendar, and that is something that I think will be keenly watched, especially because the ruling party may not really be able to hold on to quite a few of these states. So therefore, I think that is something that's a cause of worry as far as the market is concerned.
So do you think that will start getting priced in the run-up to the elections? Because everybody right now believes that in none of the three states, there will be a major impact that the ruling party could have. So is that already priced in? Does the market start pricing in it in the run-up to the elections, or do you think there will be an aftershock if the numbers were not that great for the ruling party in the state elections?
Of course, there will be an aftershock if the numbers are not very good. But I think initially we should really see some initial opinion polls. We really have not had opinion polls of any significant results. So therefore, I think the first opinion polls will sort of set direction as far as the market opinion is concerned. But as of now, the base case is that they will probably scrape through. So therefore, that is something that that could be questioned with the opinion polls. And then I think because of that, if it is something different than what the base case, then there could be certain volatility in the market.
In the current environment, while we're looking at the near-term volatility, would you deploy fresh money? Would you recommend deploying fresh money? Or there will be significantly attractive valuations that you will find once this storm sort of subsides, what's happening around the world? So you could wait it out.
I think it's worthwhile waiting it out because the storm has just started. It's not really blown over. So I think the trade war is, I think, probably going to increase the temperature for some time, and that is probably that'll probably take the market down a bit. Plus also the uncertainty about state elections, where it is not as if the market opinion will finally be with the truth. So therefore, I think there will be uncertainty on account of that, and I think you will find better opportunities as far as the market is concerned. And even then, if you really see, the market has already been supported by 10 stocks maybe. So there are so many other stocks which are really at probably historic lows, and they lost 20-30% quite easily for the last few weeks. So therefore, there might be value at some time, but I think we can probably wait it out.
A Nifty PE valuation of 19.3, is it looking stretched to you?
Yeah, I think it's the top end of the valuation band, given the earnings growth that we have seen over the last three years. But every year analysts think that there's a delta there, a dramatic change. They all start with 20% plus and then tone it down to single digits. So therefore, we are probably in that same phase now. But I think it will be probably mid-teens this year, the earnings growth. So that I think if that is likely to be the outcome, then probably Nifty has some valuation correction possibilities.
Yeah, because the valuations are still one standard deviation away from mean.
Yes, indeed.
Talking about specific sectors and pockets of value that you find right now.
Well, if you have to be in equities and if you have to find value, I think the ones which are really growing, despite all this talk about the trade wars and all that, basically it is non-public sector financials, autos, industrials. These are the ones that really offer you sort of pockets of investable universe. But otherwise, as I said, there is no great reason for you to be invested in equities.
Wow, no great reason to be invested in equities. In which case, let me ask you, some of the consumer discretionary names have come off a little bit.
Yeah.
A Titan from 1,000 to about 820. HULs of the world have corrected a little bit. Staples as well have corrected a bit. So discretionary stroke staples, if you had them in your portfolio, would you go to the extent of selling them out and waiting for lower valuations?
No, I don't think it's worth selling them because they are favorites of the market, and they continue to show some reasonable growth despite all the talk of problems in the economy. But I think so therefore they have to be persisted with. But if there is a correction, a small correction possible, and you can add to it. But I don't think there's a case for you to sell and wait for a correction and buy, because these are all-round favorites of the market. So one should be invested here.
Interesting. The retail-focused private sector banks, and I'm only talking about the top draw, which is the HDFC Bank, Kotak Bank. I'll admit an IndusInd and a Yes Bank too. IndusInd, of course, naturally finds it way, but a Yes Bank too. These four names, off the boil in the last 3 months, they've not really had a remarkable up move. Does this price correction extend itself, and would then they become a buying candidate, or would you be comfortable investing fresh surplus here?
Well, I think if you are really gung-ho about this space, which I think the market is, and I think there's a good case for on to be invested here. But a price correction can even affect these stocks, and so therefore you could add to that. But there is no, I mean, these are the pockets where I think certainly money has to be invested, because this is where I mean, these are the ones who will gain market share with the problems that the public sector banks have, and that will continue for some time, probably a couple of years. So there is a lot of significant growth coming there.
But you will wait it out.
I think you can wait it out. If you're already invested, you should be there. But if you want to buy afresh, there might be a better price points for you to enter.
Just want your opinion now as we step into quarter 2, once we'll start getting the numbers out. What is your expectation on whether last quarter's performance sees a carry through into this quarter's performance, and will you have the same surprises that came about as last time?
Well, I think the performance will steadily improve. The ones that we talked about which sectors are investment worthy, they will continue to show reasonable growth. But the ones that are not done well, like say for example the public sector banks and the like, they will continue to have significant problems. So it will be a highly polarized market as far as performance is concerned. The ones which have been doing well will continue to do well, and the ones who had problems will continue to have problems. And that's the way I think we should look at this market.
For oil and gas, with obviously right now crude oil prices have come off a bit, but there is an expectation that crude oil will cross that $80 per barrel mark, and you will see it sustain at those higher levels once the Iran sanctions come in. Do you see that weighing down heavy on market sentiment, and in particular the oil and gas basket as a whole?
Well, that I think would continue to, because there is, if you see past track record, at some stage the government intervenes, whether it is in terms of the downstream or the upstream. So therefore, I think one has to. I mean, we are at the sort of limit of tolerance of the government. So if the government continues to pass on all price increases, allow the PSUs to pass on price increases, then I think it's not a bad thing. But at some stage, I think they will probably pull the plug sometime.
Do you think it's a possibility that they may ask ONGC once again to start sharing subsidy, because they've denied it so far?
They've denied it, but at $90 they may not talk the same language. At $78 they may.
Yeah, but well, thus far you got to give credit on one part for sure, that nowhere has there in the realms of possibilities mentioned that this will happen. It's just the market conjecture that because it's happened in the past, it will happen again. Thus far, they really haven't done that. Last question from mine, at least, Mr. Bhat, and that's on some of these beaten down pockets and really tiny tunes which are moving up. So we've now had sugar, and because of a change done in the policy last week, having a meaningful up move. So really beaten down space moving up. Those cable companies, the Den Networks, Hathaways, extremely beaten down pockets moving up as well. That's been the trend the last 1 week at least. Do you find merit in some of the really beaten down names? Because you mentioned a clutch of names are trading close to their 52-week lows or life lows.
Yeah. Well, I think where there's a policy change, like what you said about sugar, where there's a policy, the possibility. No, I'm saying there's a policy change. It has already been priced in by the market. I don't know whether there's a huge up move from here. But I think the market acknowledges that there's some policy initiatives need to be priced in, and that they have done that. I don't see that there is a dramatic change in their fortunes, but there will be certainly some change which is priced in. I think the market is very efficient in pricing these policy changes. But so therefore, just because they have been beaten down, I don't know whether they'll bounce back, because there has got to be some other impetus for them to bounce back.
Right. Just one question with regards to what's been happening in terms of the market liquidity right now. I mean, while we are seeing, month on month mutual fund investments increasing, there are a few pockets which are actually seeing some amount of strain. Do you believe that this liquidity, there will be a strain on liquidity going forward, or we are pretty sorted on that front?
Well, I think the last month the results were not all that good in terms of mutual fund flows. So I think it all depends on the sentiment in the market, and if the pink press and the media keep talking about an impending correction, retail investors get affected by that. So that is what you saw in the inflows in August. But if they don't make the headlines, the bearishness doesn't make the headlines, then I think it should continue to show this $1 billion plus sort of inflows to the mutual funds every month, and that will sort of keep the sort of outflows that we've seen from FPIs under reasonable. I mean, the market can sustain these sort of outflows as long as the mutual fund inflows are of this order. But if the bearishness continues, you don't know. It might also change.
All right, we'll leave it at that, Mr. Bhat. Thank you so very much for joining us and sharing your views with us on the show. That was Mr. Bhat of Dalton Capital Advisors. A quick take on the markets and a quick check on the currency before we wind up this session. Markets are down about 1%, so steep cut approaching 11,400 on the Nifty, with the Bank Nifty losing more than 1%. For the rupee, the start has been weak, almost 1% given up and still holding there, 72.55.
Yep, well, weakness across. Take a break on that note. On the other side, we talk about a strong pocket. Well, this recent drug approvals, U.S. FDA inspections, and competitive intensity in the markets. With that, Ramesh of Lupin. Stay tuned.
Good news, guys. Got a promotion and a damn good raise.
Congrats, beta.
Congrats, मेरी तरफ से भी.
From mama too.
वाह, रेज. अब तो इंश्योरेंस पॉलिसी ले ले.
इंश्योरेंस? कौन सी कंपनी से लूं?
सोचना क्या? चूज वही जिस पर हो पूरा भरोसा.
वीरू, go for convenience. My company is online, quick and simple.
बेटा, बट पॉलिसी समझाएगा कौन?
वेबसाइट पे सब है पापा. I can even call and ask.
क्लेम सेटलमेंट का रेशो क्या है? मेरी कंपनी का 98% से ज्यादा है.
That's good, but आज की generation wants everything online. Easy premium payment options, loan facilities और wide range of products.
अरे पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना. Same choice. LIC.
LIC ट्रेंडिंग विद टाइम्स 62 सालों से हर जनरेशन की पसंद.
Dreamers. They're everywhere. You've met them, been to school with them, worked with them. They didn't seem different. Yet she's the one who surprised everybody. His crazy idea actually worked.
They are not different, they are you. When you take a chance on yourself.
These are the dreamers who found a way to run the engine of the world. These are the entrepreneurs. There is no formula. There is no right place, right time. There are no overnight successes.
But there is toil, there is preparation, and there is tenacity.
There is no end of the road, no obstacle large enough. There's just the vision and the heart that won't give up.
Because Aegons of business never stop.
Aegons of business never stop. Only on Bloomberg Quint.
September 15th, 2008. The day a titan of the investment banking world fell. An event so unlikely that when it happened, it shook the world economy. 10 years later, the world has picked up the pieces. Or has it? Bloomberg Quint looks back at the collapse of Lehman, its aftermath on India, and the recovery that followed. Lehman, a decade later.
Welcome back. You with us on Indian Open. Now, Indian pharma companies have had a tough time of late. No surprise, really. Everybody knows about it. And especially for firms with a sizable presence in the US, as pricing pressure thus far has only added to the existing regulatory woes. But things may have started to change a little bit. One company that can perhaps buck this trend is Lupin. The drug makers just received approval to sell some flagship drugs in the US region as well. there are, of course, hitches over the space with warning letters existing on some of the companies as well. In Lupin's case, a couple of plants also have this. So what's the outlook looking like, and how have the last 3 months been very different from what the last 3 years have been? Let's talk about the overall market sentiment and some of the topics that we'll touch base upon with S. Ramesh, the Chief Financial Officer of Lupin, who's here in our studios. Ramesh, so good having you. Thanks so much.
Thank you very much. My pleasure.
No, that's my question really. Have the last 3 months been different from what either sentiment-wise or otherwise the last 3 years have been? Because the market certainly seems to believe that there is some bit of recovery in business and sentiment in the offing.
You're right. It's not just the last 3 months. I think the last few quarters have been pretty, lackluster for pharma in a general sense, and especially for Lupin itself. But things are certainly turning around. For starters, I think price erosion has been contained around the high single-digit mark. Second, we do believe that we would have a few more. Our problems are kind of exceptional because of the fact that we had lost exclusivity on a couple of big molecules for us, and that obviously is telling on our performance in the U.S. But having said that, we were also stymied by the fact that there were not too many good approvals coming through for us, especially because of the warning letter, which we were facing. But having said that, when it comes to, in fact, newer launches, we do expect, in fact, a couple of launches during the course of this year, levothyroxine for sure, and Ranexa. The second most important thing which is happening for us is essentially Techincal. That's something that we launched as a brand. It's a branded product which we bought into. It's going to be an anchor product for our women's health portfolio. And we do, the initial, reception from the market has been very good. The prescriptions have been going up all the time. For all of those reasons, we do believe that it will turn out to be a pretty good product for us. We do expect that ramp up in the third, fourth quarters, certainly not to the levels that will peak at possibly in about 2 to 3 years' time, but it's certainly ramping up. For these reasons, we do believe that the second half would be certainly better than the first half.
Okay, and just one follow-up on that answer that you gave with regards to pricing. Now, you mentioned that pricing pressure seems to have contained for now. Is there a possibility that we can look into the next 2 or 3 quarters or 4 quarters and predict whether the pricing pressure will remain or the pricing will remain at these levels, or could it actually even show a bit of a bounce? Any thoughts that you have on how pricing will shape up over the next 4 quarters?
I think it's going to be contained. The price erosion is going to be contained at this level. But going forward, things could be better, more because of the fact that there is consolidation happening in this industry also. A lot of this pricing pressure in the past is because of channel consolidation, and that's of course come to more or less an end. And there's a lot of other companies which are also saying the same thing. They're saying that they're going to shed their portfolios, and they're also not seeing too much of price pressure coming in, henceforth. The other part is when it comes to the channel partners also, they would like to partner with companies who have the track record of supply chain metrics, of quality. To them, the last thing that they would like to be into is a situation of a stock out. So to the extent the number of people that they can actually partner with is going to be limited. And that leaves a limited number of people from India. The other thing which is my personal perspective is that a cost of doing business in America is certainly going up because there's a lot of capital expenditure required for newer companies to set up and start supplying to that market. And a lot of companies who are seeing that the returns are going to be lower might fall out of the American market. That would potentially mean that it's going to be the bigger players in there who are going to consolidate and grow in that game.
Okay, Ramesh, post the first quarter when you spoke, and I'm happy you maintain that second half will be better. But what's the scene currently with the US market in terms of how is Gavis performing? How much benefit will the rupee get to you? How much is the core growth that will come in? Because no doubt the US market, the revenues will go up because how the rupee is panned out. But ex the rupee, what's the scene like currently?
The rupee is, of course, a big tailwind for us. You spoke about, in fact, Gavis. As you'd be aware, and I said this before in your own studios, you're aware of the fact that you've taken an impairment.
Yes.
And that is obviously, so to the extent you have taken the losses already. There are more upsides coming in from Gavis at this point of time, and that's not been factored in at all. As I said, going forward, given the fact that our, a lot of our more complex products are yet to click in. For example, next year, I think starters, we would have ProAir coming in. Okay. I'm not going to take this card because this year I've already said that. There's other things coming up on the inhalations portfolio. We have also, in fact, the biosimilars, which is going to blossom for us. So all of this will certainly start contributing.
Okay, so I'll talk about all these products in detail. The first, I think the point is that you said that $800 to $850 million will be the sales guidance acquisitions. You've done close to 177 in the first quarter. Pretty much the street expects a similar number in the second quarter.
Yes.
How are you planning to do it? Because the street certainly feels that this number probably won't be met. Your internal estimates, and how is this going to happen?
So essentially, as I said, so levothyroxine is going to be a decent product for us. That would be, so none of these are going to be in the same range as a Glumetza or a Fortamet, but it's certainly going to be tens of millions, so to speak. Then we have Renexa, which is going to be limited, competition. It's virtually first to file for us. Essentially, it is going to cross for the first few months that we have that. And that, of course, Secretizol itself. And apart from that, we do expect, in fact, resolution, in fact, of our FDA issues by the end of this calendar year. We've already done what it takes to, to get it to par level. We have been submitting frequent updates to the authorities. It's a question of time before they come in and inspect it again. And we do expect resolution to happen by the end of this calendar. And you start newer approvals coming in from there and so on. So all of this will certainly click in.
Levithro is something that, the street is very, very keen on. Probably the street anticipated that in the first half this approval will come in. Many of them believe that September will be the month. Your internal estimates, what is the peak sales probably you see from this drug? And with competition coming in, Amneal has already come in. How are your internal estimates for this drug?
As I said, it's never going to be another Glumetza, but for sure it's going to be in the multiples of tens, 30, 40, so to speak.
$30–40 million.
Yeah.
Okay. When do you expect the launch?
Towards the end of this fiscal, as I said, second half of this year.
And competition, how important?
Competition is there for every product around, so there is going to be competition for this product as well. But despite that, we do believe that it is a pretty complex product. Approvals are not going to be easy for this as well. Yeah.
Okay. Secondly, what's the pipeline? You already spoke about a couple of drugs that are there. Just a detail for our viewers over the next few months till the end of the fiscal. Which are the important key drugs that will be out of the Lupin stable that probably will drive revenues?
At the cost of repetition, I just told you about levothyroxine. I spoke to you about Renexa. Then we also have ProAir coming into towards at the beginning of next year, early part of next year, so to speak. And then there's a lot of other products, so our pipeline is indeed rich, 300 odd products, of which about another 150 to go. So we will be looking at, in fact, at least about 20 to 25 launches over the next, every year for the next 3 to 4 years.
And for ProAir, what kind of peak sales are you anticipating? It's time, but we just want an estimate approximately.
It could be a pretty large product. It could potentially go up to about $100 million also. So because essentially it's a fairly large molecule, it runs to close to a couple of $1 billion. There is going to be very limited competition for that. Perigo is there. Cipla has also come out of the news saying that they would also be at some point of time getting in there, and it's us. It's of course 3 products, so to speak. So it's an HFA market, so to speak. And you have ProAir, then you have Ventolin and Proventil. So all of those would be captured by the first generic, so to speak.
Okay. Just a few questions, Neeraj. There are some concerns that the market has, and just wanted you to answer. One of them is Solosec, which was launched. It's been a while since this drug has been launched, but the market share is relatively low for the company.
It's not true at all, because we launched it pretty laterally. So eventually it was only towards the end of June that we launched it.
And it's 3 months.
It's 3 months, and the prescriptions are a lot more than what we anticipated. It's at least in the range of 10x in terms of our anticipation. There's a lot of reasons to believe that it will actually, do very well for us. So and our own, take from the doctors, from the gynecologists who are prescribing it, it's doing very well.
No, but the reports that I read, the IMS notes that have come out, we obviously we don't have access to it. We depend on the brokerage, and they said that the market share is just 1% in 3 months. So firstly, it's a concern that ramp up has not happened. So what are you doing? Are you going after new doctors? Are you looking at business from the same doctors? What's your strategy with this drug?
Most importantly, I think the formularies are accepting it. Its acceptance rate is very, very high out there. And of course, need to go after the doctors, and it's exactly what we are trying to do out there.
Okay, Neeraj, you have a few questions, and I'll come back.
Yeah, so I was looking at some reports and somebody's done this annual report analysis for you as a company as well, and their analysis seems to suggest that for FY18, acquisitions have led to a boost in revenues, and then they've done an analysis for the last 8 or 9 years, and their belief is that all of the acquisitions that you've done have somehow led to a boost in revenues for you, so they have worked out very well. My question to you would be, the next 2, 3, 4, 5 years out, would you reckon that revenue upticks for companies at large and for Lupin in particular would be a factor of how well a string of pearls acquisition strategy is carried out?
So let me start with, in fact, the first question that you asked me. It's true that we have been acquisitive over the last 10, 12 years, so to speak. We've done close to about 15 acquisitions. But I think you would look at acquisitions. The first year is obviously an acquisition. Then after that, over the next couple of years, it's all about actually do you organically grow that. If we talk about most of our acquisitions, we actually bought it when they were pretty small companies, and over time we have grown it to a pretty large number. Case in point, to look at South Africa, we bought it when it was perhaps in the 10, so to speak, 10 to 15 $million. It's close to about $80 million. Philippines, we bought it when it was $4 million. Homosan, when we bought it, about $4 million. So all of these have been near, scratch, so to speak. So it's a virtual organic play that we have indulged in, so to speak. So, and it's fair to estimate that about 85% of our growth, if we take the actual incremental to be actually organic, 85% of our growth has actually come from organic play only. It's only about 15%. And to that extent, the one large acquisition which has not paid off is essentially possibly Gavis. Apart from that, most of our acquisitions have done extremely well over time. The first. The second part of the question, when you speak about going forward, so the most important acquisition in recent times has been Secnidazole, and we bought it at a fairly reasonable price, and we think the kind of monies that you could make out of it is pretty good. And the payback period, which I think is the most important estimate for a lot of this, and a metric could be perhaps about less than 5 years.
But so again, that estimate seems to suggest that not just in the recent 2-3 years, but over the last, 8 number of years that you've acquired small companies and maybe gotten them big, or small products and gotten them big, the revenue contribution has been fairly strong. The profitability contribution from these at least remains a bit muted. Would you agree? And if so, would you do something to change that?
I have a different view in that, except for Gavis, which I think has been kind of not so good for us. Others actually have grown in profitability. When you bought into Japan, for example, it was actually a turnaround situation. It was actually a loss-making unit, and you made it profitable. Nearly every other company of ours has actually been, break-even or slight profitability, and we've only increased it. Even Mexico. The other company which is still perhaps in the red in some ways is potentially Brazil, but it's a difficult market. It's just it's still early times. It's been less than 3 years since we bought into that. But there are parts of the business which are doing very well, and we are expanding, getting into a newer portfolio of products, including the OTC segment out there, and that's one reason why it's actually losing monies. In the general sense, I think we are focused on making all our acquisitions work. I'm not saying that it actually has worked in everything. Gavis has always been the case in point. But in a general sense, we've been pretty successful in integrating most of our acquisitions to make value for us.
So I just want to dwell more on Gavis. Now, just a word on what went wrong actually in Gavis. You said you've taken an impairment, so it's a clean slate now. Yeah. What happens now? Are you infusing more money? What's your expectation of Gavis now? Because now it's a clean slate, because all the losses that you've taken. So what can I expect from Gavis now?
I think Gavis is integrated into our American operations itself, and I think calling out Gavis all the time and seeing it separately, it's a siloed approach. I don't think that's fair at all. I would say that it's fully integrated. The controlled substances market is obviously has its own ups and downs in the American market. Currently, the prescriptions are down when it comes to, in fact, controlled substances, and obviously has an impact on the fortunes of Gavis itself. Going forward, we see that as a good manufacturing facility. We've got a good R&D team out there, and we'd like to make good with that.
What about the facilities now? You recently got clearance for your Nagpur facility, which is good. But the two important facilities are Indore and Goa, and you've said this on multiple forums that you've done your remediation. What's the update as of today? Have you received any communication from the U.S. FDA? Are you fully compliant on your end that they can come in anytime and check this facility?
I took this up front. I said we are in a state of readiness. We are in a position to receive them at any time that they feel like. And I would imagine that this facility would certainly see better times in the next by the end of this calendar year.
But have you communicated to them that you are ready, and have they responded to anything?
So it isn't like that, So we are obviously in a state of readiness because we've done all that it takes to get it to that level that is desirable. It's for them to come over and do their inspection.
Okay, a couple of follow-up questions. Glumetza and Fortimet, what's the market share now? What's the future for these two drugs from Lupin?
Never get into product-wise revenues. Those are marginal products in a scheme of things. So it's already seen a lot of competition. There's been price erosion also. So it's just one of those products in our portfolio currently.
Okay, Renexa exclusivity is something that you have. What kind of sales can we anticipate? How big of this drug will this be?
It's a fairly good product. It's obviously not going to be the same league as the Glumetza or a Fortimet, but will do well for us for this particular calendar year.
Okay, coming back to Solosec, because I believe a lot of analysts in the street had questioned, how much are you spending overall on this, and how much returns is this drug going to get you?
I don't know what you mean by spending. So essentially, we bought it for good value, and we do believe that the payback period would be between 5 to 6 years at very worst.
Spending in terms of ramping this up?
The usual stuff when it comes to, in fact, promotions. So essentially, about $45–50 million on annual basis.
Okay, what about Tamiflu? How confident are you that over the next few quarters this drug can get you sizable returns?
One of the reasons why I'm a lot more bullish about the second half is because Tamiflu, it's certainly going to ramp up because of the flu season, and you would still you would know that we have a lot of products in our cephalosporins in a range. And those would contribute to the flu seasons coming up between October and March this year.
Okay. One question, and I think this is a concern that I had conversation with several analysts to the report. The question is that why is the R&D productivity much lower than peers? And what I mean is that why haven't you gotten any difficult to produce product approvals of late?
Yeah, we're taking, we're conscious of that. The fact that some of those approvals that we should have got have escaped us because I think it's come a cropper with us. It's for two reasons. So one was principally because we had done some work with, in fact, Semler, which is one of those blacklisted CROs with the FDA, and there again we had the misfortune of some good products which you should have got in the normal course, failing at the last step because of this. The second is because certain products, where we believe that we should have got our act right, we went the wrong pathway and we got it wrong. But having said that, I've said this in multiple forums, we are working with, in fact, external consultants, big consultants, for getting a lot of our act right when it comes to our cost base. I'm very conscious of the fact that the R&D spend is pretty high. It used to be about 12 to 13% in recent times. We'd like to cap it at 10%.
Okay.
Firstly, I think we are focusing on R&D productivity itself, making the R&D dollar run a longer mile. The second part to it is obviously we would, we've also got into a relationship with in fact, financing arrangements whereby the downsides are protected to the extent that the risk is passed on to, in fact, the financial investor, but the upsides we would be sharing in. And we're doing that for all of those risky molecules. So you'll see good times coming in from R&D. Okay,
and a final question from my end. It's a repeat of this thing. Just want your how confident you are that you will meet your $800 to $850 million.
At this stage, fairly confident.
You're not revising it at this point of time?
Not at this stage.
Yeah, that's from my end, Neeraj.
Okay, now just one last question to wrap this up, Ramesh. If all of the answers that I've heard you say, which is that pricing pressure in the US seems to have bottomed out, you are hoping for some approvals coming in by the end of this current calendar as well, and you're conscious of the costs, etc., that are shaping in. Would calendar year 19, I'm not dividing into FY19, but calendar year 19 as a year, will it shape up much better than what calendar year 18 you would expect it to be? I'm omitting calendar year 17. There's a bit of a washout here for most companies, probably including yourselves. Are you a lot more bullish into calendar year 19?
I don't need to be a soothsayer here, but I could tell you for sure, FY 19-20 would be certainly far ahead of 18-19. It's certainly going to be much better.
And FY 18-19 also, you seem to be a lot more bullish than what...
I would say it's going to be one of those lackluster years, perhaps the same level as perhaps last year. But the next year, I'm fairly confident.
Okay, and for multiple reasons that Ramesh has already outlined for the industry as well, you would believe, Ramesh, that would be the case?
I would imagine so. That's true.
Okay, great.
I think we have seen the worst of it all.
I think he's answered most of the questions.
That's
more
the
like a rapid
really.
fire that we did with him at Fizz Talks, but I think he's fairly confident.
Yeah.
Let's hope the street is also as confident.
Yeah, but well, it's showing in the stock price. But Ramesh, thanks so much for joining me today. Really appreciate your time. And viewers, thanks for tuning in to this leg of Indian Open. Must say there's a bit of a reset button that the currency markets and the equity markets have put out today. So it's back to square one. And let's hope that the scene doesn't worsen from here on. Thanks so much for tuning in to Indian Open. Up next is the FNO show.
Good news, got a promotion?